Hey everyone out there, welcome into Market Takes. It's another exciting edition of Market Takes. Today we are looking ahead to the week. There's no big data release that just came out this morning, but we're going to look ahead and talk about all the things that are going to be coming up this week to get you ready for what's coming so you can jumpstart your week prepared, ready to go, hit the ground. It is Monday, 10 a.m. Eastern time here in New York City, and I am Dion Rabowen, the host of Market Takes, reporter at the Wall Street Journal. Thank you so much for being with us. Look, here's what we've got going on right now. We've got this global banking crisis that everyone is talking about globally, really, as it's a global banking crisis. Here in the U.S., you've got this thing going on with Silicon Valley Bank. Big news on that today. We'll get into that in just a sec. Also coming up this week, we've got Fed Vice Chair for Supervision, Michael Barr, is testifying before the U.S. Senate and the House. We've got ECB, European Central Bank President Christine Lagarde. She's going to be speaking on Tuesday ahead of some very important and key Eurozone inflation data. We've also got an update on the Fed's discount borrowing window and global central bank holdings. That's going to be big this week. Also, New York Fed President John Williams, he is one of the most influential folks on the Federal Open Markets Committee. That's going to be big. They are all, of course, going to be talking about these banking issues that have really, it started with Silicon Valley Bank, or maybe it started a little bit earlier with Signature Bank, but this has had global ripples, so everyone's going to be talking about that. It's on folks' mind, and we're going to tell you what to watch out for, what you need to know. Also, latest data on recession expectations. We also get some updates on inflation. So we're going to get the Conference Board's Consumer Sentiment Index on Tuesday, the Conference Board's Consumer Confidence Index on Tuesday, and then on Friday, we get the University of Michigan Consumer Sentiment Index. That's coming out. We also are going to get Case-Shiller home prices. That's for January. That comes out a little bit earlier in the week, and the U.S. monthly housing prices index on Tuesday, along with pending home sales on Wednesday. That you're going to definitely want to watch out for because housing is a major piece of this inflation picture. And we will talk about the state of business. We're getting advanced economic indicators, another update on the GDP report, as well as the personal consumption expenditures report, PCE, the Fed's favored gauge of inflation. That's coming out this week, along with a report on U.S. profits. So let's talk really quickly about the global banking crisis, where we are, what's happening with that. The latest news this morning is the FDIC tweeting, today we entered into an agreement with First Citizens Bank and Trust Company to purchase and assume all deposits and loans of Silicon Valley Bridge Bank. That's just what happened when the FDIC took over Silicon Valley Bank, renamed it Silicon Valley Bridge Bank. That's what's happening now. First Citizens is a North Carolina-based bank. They're going to take over all 17 branches of Silicon Valley Bank. That's big news. First Citizens stock is up 43% at the open. This would be the best day for First Citizens in a very long time. FDIC estimating the cost of the failure of Silicon Valley Bank to its deposit insurance fund will be approximately $20 billion. This move right now sending markets higher. We're seeing global stocks up right now. The DAX in Germany is feeling some relief on some of these Deutsche Bank worries. That's up big. The S&P, the Dow, NASDAQ all up a little under 1% right now, but moving in a positive direction. Remember, Credit Suisse was taken over by UBS, and Deutsche Bank shares really started to tumble. Well, Germany's DAX index, which is their benchmark stock index, equivalent to basically the S&P or the Dow here, that's up big today, almost about 3% earlier today. Now, how did we get here? We put out a report last week, or a couple weeks ago, it might have been at this point, on how Silicon Valley Bank's collapse is impacting the overall global banking sector. Make sure you check that out. We're going to have that linked so you can easily find that when you're watching on VOD. But check that out. Basically, the big problem was Silicon Valley Bank made some poor decisions in not hedging a lot of its bets on treasuries. But the big problem for the overall banking sector is Silicon Valley Bank wasn't doing anything different than what other banks are doing. A lot of the assets, basically any asset that you purchased about a year ago, is going to be worth less than what it was at that point now. So a lot of these banks, when people are returning and saying, hey, I want my money back, I need my deposits, they're saying we don't have it. We've put this in these assets, and these assets are worth less than what we paid for them now. So if we were to sell them, we'd have to sell at a loss, and then we would have less money than what we got in deposits. That's a big problem. And if there were runs on all these banks, the big five, US Bank, Wells Fargo, JP Morgan, Bank of America, those guys generally would be all right. And Citigroup, you throw them in there. But for other banks, there really isn't a bright light. If they get bank runs, they're not going to be able to fulfill those because the things they've invested in, whether that's mortgages, whether it's mortgage-backed securities, US Treasuries, which are very safe, have all lost value over the past year. And Treasuries especially, the price of Treasuries has sunk significantly. So that gets us to the role of the Fed, because the Federal Reserve has really stepped in here to play a big role, making sure all this happens. We talk about the Fed a lot, and the Fed has injected a lot of liquidity into the system. Fed Vice Chair for Supervision Michael Barr will be testifying, as well as FDIC Chair Martin Greenberg, and Treasury Undersecretary for Domestic Finance Nellie Liang will testify at a pair of hearings, Senate Banking Committee on Tuesday and the House Financial Services Committee on Wednesday. So those are going to be big. You're also going to watch out for, in terms of the overall picture for central banks, European Central Bank President Lagarde. She's going to speak on Tuesday, and then on Friday, you get Eurozone inflation figures. Now, that number was 8.5%. You saw 8.5% year-over-year inflation in the Eurozone for the last month. That was back in February. For March, if that number is up above 8%, that's going to signal that inflation is not falling. Remember, the ECB raised rates 50 basis points at their last meeting. That's a very big hike for them. Remember, rates were negative just about a year ago, and this increase now is they're moving at a very fast pace and saying, we're not worried about this banking sector thing. We're going to keep raising rates because we have to fight inflation. If inflation comes in hot this week on that number for Eurozone inflation, you could see more worries about the overall banking system, the health of the economy, all that good stuff. On the other side of the coin, here in the US, the Federal Reserve has taken some pretty significant steps to try to shore up the banking sector. And I want to throw something up here on your screen to just kind of illustrate what we have seen from the Federal Reserve and the overall state of things and how the Fed has operated. Now, you're seeing that what you see is, starting at 2020, the Fed just buying up everything, what we called QE infinity, and that number kind of goes up, and then it starts to come down as the Fed starts raising rates, implementing quantitative tightening, or QT, basically not buying any more bonds and actually letting the ones that they own mature and not buying them back. But then at the edge of the right side of your screen, you see that line that goes basically straight up. That's what's happened over the last couple weeks, because the Fed has had to try and pour some water on this financial crisis or this banking crisis, and that's had them add a lot more to their balance sheets. And we're seeing that number pick up back towards the $9 trillion figure, which is where the Fed had purchased bonds not even, let's say 5-6 months ago, before they started quantitative tightening. So wanted to put that up there just to illustrate the overall rate of things and how this banking crisis has adapted. We'll hear from New York Fed President John Williams on Friday. And he's going to be kind of the most influential speaker that we'll hear from after the Fed's meeting last week. Listen, let's talk inflation and recession worries, because those are obviously on people's minds. We get the Conference Board and the University of Michigan's Consumer Confidence Index and the Consumer Sentiment Index. Those are both coming out this week. A little bit about the difference between the two. The Conference Board is more about how people feel about business. It's more about how folks are thinking about the state of business, how easy it is to do business, how difficult, how they think businesses are doing. Whereas the University of Michigan survey basically asks, hey, how are you feeling? How's your financial house? How is everything going for you? And when we look at those, really the most important one, I think, for consumers and for what folks are going to be doing, whether they're going to continue to spend money, whether they're going to keep buying things, is the University of Michigan. That has been trending up this year, but we've seen some worrisome indicators, and also how much has this banking crisis weighed down the consumer. So want to put a chart up here on your screen really quickly. It's the University of Michigan's Consumer Sentiment Index. You see it kind of went down going into 2023, but over the last couple months, we've seen that pick up. And will we see that continue? That's the big question. We are seeing a big decrease from the Conference Board, saying the second consecutive month their index decreased. This is different from the University of Michigan index, which is up on your screen. Want to take that down because I think we've illustrated our point there with the University of Michigan. But the Conference Board saying the decrease reflected large drops in confidence for households aged 35 to 54. Those are the most important households. Those are prime earners, aka prime workers, and for households households earning $35,000 a year or more. A lot of confidence being lost there. that's big, and that's going to make a difference. Also, housing. Housing has played a big role in the overall inflation story because the Fed can have a direct impact on housing. By raising rates, they make it more expensive to get a mortgage, make it more expensive for companies to borrow to maybe get some of that commercial real estate. Well, want to throw another chart up here on your screen, and that is existing home sales. Now, you're seeing the number of existing homes purchased each month decline, until up last month, you see that number rising higher. That's a 14.5% increase year over year from the previous year. Now, what does that mean? It means folks are still going out buying homes, taking on mortgage, doing exactly the opposite of what the Fed wants when it's raising rates to try and get the economy and trying to get inflation under control. Well, that's not a great sign for the overall economy because it means the Fed may have to do more. It means what it's doing isn't working. So that chart just kind of illustrates what we're seeing from overall housing purchases. You saw housing slowing down, prices were coming down. Well, prices are starting to pick back up. We will get some more data from Case-Shiller. They're going to come with the January home price index on Tuesday, and the pending home sales index is on Wednesday. That says how many people are signing contracts before they actually buy the house. But when you go under contract, this report is going to tell us how many people are getting under contract in the last month. And if that number is picking up, well, that shows you overall across the board, housing is picking up, people are spending, they're doing the opposite of what the Fed wants, may mean the Fed has to be more vigilant and may have to raise rates even in the face of this banking crisis. That's what all this means. And then finally, we get the PCE report, purchasing expenditures. Ooh, I'm saying the whole word wrong. Let me start again. The Commerce Department is going to release the Personal Consumption Expenditures Index. That's the price index, basically the Fed's favorite gauge of inflation. It was at 5.4% last month. Economists are expecting that to fall below 5%. If it doesn't, the Fed may have more work on its hands, and that may mean a tougher economy, making it tougher on banks, and we could see more worries about the banking sector pumping through Wall Street and start to get folks worried. Again, we're going to get a lot of information this week. This is a big week. We also get a report on corporate profits on Thursday. Last week, we saw durable goods orders fall for the second month in a row. Durable goods are things like cars, washers, dryers, refrigerators, air conditioners, stuff like that. We also get the advanced economic indicators from the Census Bureau for February. That's going to be a big report. Watch out for that. Listen, this is Market Takes. We are looking ahead at the week. That's what you got coming up for you this week. I hope I jump-started your week really well, and I appreciate y'all tuning in for Market Takes. I hope you will be back because we will do it again right here Monday morning on Market Takes. I hope to see you there next time.